Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, a very quick update we're going to do now on Bitcoin. We're going to start here on the BLX on a weekly time frame. We're going to look at both the bullish and the bearish counts. We're going to do some classical analysis and then we're going to zoom in and have a look at the smaller time frame. So first things first, primary count. I'm bullish, the primary count is bullish. I've been bullish for a long time, everybody knows that. And I believe that we've had a wave 1 into wave 2 at minor degree. It could be intermediate degree within primary wave 3, within cycle wave 3, going a lot higher in the years to come. I do believe that I do feel, I can't say for certain, that in the shorter term we're getting a little overbought, things are getting a little extreme, and another pullback in the short term is likely on the cards. We'll talk about that more when we come into the smaller time frame, but I've labelled this minute 1, minute 2. Minute 2 of course hasn't happened yet, but I'm expecting the wave 1 at minute degree to top out sometime soon and then push on into the 3. Now don't worry about where I put these. If anybody gets carried away with themselves by saying, oh my god, Tom's put these numbers all the way up here, they're just out of the way. They're not targets, they're just out of the way. So if anybody takes that seriously, they're not really thinking clearly in terms of why I put those numbers up there. I'm literally just keeping them out of the way of the count. So we're bullish. The invalidation for this count is at 15,495 spot 37. That is in terms of the primary wave 2 being in at that point. Invalidation of the larger cycle wave degree, wave 2, within, so because the primary wave 2 can't come back beyond where the cycle wave 2 began, or whether primary wave 1 began, excuse me, is all the way back at 3148 spot 33. So it's a long way away, and that is essentially the bullish count on the long time frame. Bearish count on the long time frame is that we've peaked in a wave 1 at cycle degree. We've had the W down here. I can't get this to swing as 5 cleanly. The subwave count just won't allow me to do it. It seems to simply divide time and time again as a series of zigzags. You can try and bully 5 waves into these things, but generally it looks to me like a bunch of zigzags. So that's how I've labelled it. This could easily be 5, 3 and 5. We come into an X wave and then we come down to new lows at a larger cycle wave degree. This is the best I've got from a bearish point of view. So in the meantime we're looking for 5 waves up into the C. We will then top out and then come down in another large zigzag to new lows. I feel somewhere, if we were to do this, we would still be coming down somewhere into all of this prior structure. Okay, and prior support. Okay, golden ratio and all that, 89% retracement. All that stuff's down here. So there is still hope that we'll get to buy Bitcoin lower. You mustn't confuse my bullishness necessarily with happiness that this is the case. I'm happy for it to go up, I am, but I'd be even happier if it were to come down to 8 grand and let me buy more of it. So I feel like getting too emotionally attached to a count is a mistake, but I am convinced, and that's all I can really say. For the meantime, I am convinced that it is bullish and we are going to continue to move higher. So that's the long-term view of the counts. Now let's do some technical analysis, classical technical analysis. So why do I have this bullish bias? Well, we're going to start all the way out in the monthly time frame first. I'm going to start with the MACD. So these bullish and bearish phases, bullish and bearish markets, supported by momentum, are pretty clear-cut when we look historically on the way they behave on the MACD. So let's zoom all the way in. I pointed this out before, but I'm just going to point it out quickly again. Here's our first big bull market during 2012 into 2013. We cross on the average through the signal on the monthly, we get a bearish phase. This is our first big bear market through 2014-15. We cross with the average through the signal below the zero bound and we push higher. This is our next big bull market, all the way up to 2016 and crashing down into 2018 into our next big bear market. Average crosses through the signal above the zero bound this time, and we had COVID here, which is a little blip around March 20, but overall we move from negative momentum on the histogram into bullish momentum on the histogram, and we have our next big bull market. Average crosses over signal above and we crash down into our most recent bear market. Average crosses through the signal below, and we move into our next bullish phase. None of these large or significant and substantial swings in bullish and bearish momentum, once we gain sufficient traction, are ever reversed. We complete the next phase. So if we have indeed completed this bearish phase, this is now the next bullish phase, and momentum will continue to grow over the coming months and years into what I believe will be a very extended bull market based on the primary count of 3 within 3 within 3, which means 4 within 4 within 4, coming down before we move up into that fifth. So we'll get a lot of move up followed by sideways, move up followed by sideways, move up followed by sideways, and we'll see longer, more drawn out corrections for a much greater, far more extended period of time than we've seen in these prior wave 1s and 2s. So we're going to be higher, and we're going to be higher for a lot longer, and we're going to get a lot of frustrating sideways movements over the coming decade or so, maybe shorter, maybe longer, but that's what I think is happening. So if we come down to the weekly time frame now, and we have a look at some evidence over here. So on the weekly time frame, we're going to look at the RSI now. We've looked at the MACD. So on the RSI, we get these prolonged periods of overbought conditions. You see them on the daily time frame, you see them on the weekly time frame, you see them on the daily and monthly time frame. Even you get these prolonged periods of behavior above the overbought line, above 70 on the RSI. Now these are your big bull markets. We can stay overbought and visit it frequently for a very long period of time and continue to push to extremely high readings of above 90, right? But once we're done and we cross back through the neutral zone on the RSI, and we cross back through the neutral territory and we head towards oversold conditions, that swing from the last extreme overbought condition to the extreme oversold condition, that's your bear market low. Right, now it's not your low in price, it is often the preceding feature before we get bullish divergence. So for example, RSI reached extremes in June 22. We had bullish divergence on the weekly time frame, lower lows in price, higher lows in RSI. Obvious that the rally was inbound, and subsequently has been. Current RSI reading is now up at 82, which is pretty high, but nothing comparison to the extremes we can get, and it's the first real push into extreme territory we've seen to early days in the new bull market. But definitely, well, not definitely, but possible that we could pull back in the shorter term. So now if we look at these, this consolidation pattern we saw in the ABV, downward highs and the rising lows, we breached that to the downside. This did appear quite bearish at the time, but it was a larger wave correction, so it makes sense to appear bearish. We did not make new lows though, and we did not in price either. If we are bullish, we will continue to accumulate more bullish volume overall than we will bearish, and therefore we will continue to see the OBV march higher in support of the rally above these levels, above these highs, and off to new ones. That's what I'm expecting to see. In a bearish circumstance, we would expect to see more overall bearish volume accumulating, but we have not seen that, and price is getting stronger and stronger. Right, anyway, there's a bit of classical analysis. Now let's have a look at our exponential moving averages. We're above the 250 weekly exponential moving average. We never pierced it, so we never got that 60 through the 250 on a significant time frame like the weekly. We did do it on the daily time frame. We did not do it on the weekly time frame. The 10, 20 and 60 are all pointing up, including the 250, of which they are all above it, with the price above all of those. Generally looks very strong at the moment, potentially a little overdone in the short term, like I said, a little overbought in the short term, but looking good on the larger time frame here. So now let's establish the smaller time frame, shall we? So let's come down to the 4 hour here, and we're going to bring up the primary count first, and then we'll look at the lower wave degree count. So on the smaller time frame, this is our primary of intermediate 1 into intermediate 2 as an expanded flat. So we had a 3 wave move to here, we had a 3 wave move to here, and a 5 wave move to here. C, finishing beyond where the A completed, B, expanding beyond where the A began. Perfectly ordinary expanded flat. We then form a base channel here, and then we breach that base channel and we back test it, and we move higher to the median line, we snag around the median line. We then move to the 38.2 of the pitchfork, we then back test the median line again. The best I can make of this in terms of a smaller time frame count is that this is 1 2 1 2 1 2 as a leading diagonal, 3 4 3 4 3 4. So essentially your 1s are overlapping, right, and your 4s are overlapping, revisiting the prior territory. So we're now off into the 5th of what I've got as minor 1. Now that could top at any moment. It could continue to push higher, but it could literally top out at any moment. We could push we could have another big 5-wave move, right, and do something like this for the 5th, or we could top out just above the 3, or even level with it for a double top. So it depends how strong that wave 5 is going to be. If we compare the wave 1 at the same wave degree from the 4, you can see that we've already gone past 1 to 1, so we've done the minimum. So it could be in. I'm not saying it is, but we just need to be aware of that. So what that means on the smaller time frame is that, you know, looking for a bearish short STS setup, standard trade setup, where we swing to a low, back to a lower high at a smaller wave degree to get that most secure margin of error and margin of safety between the highs, would be the best way to set up a short trade, which is definitely given the divergence that's building up. Let's just have a look at the daily for a moment so I can show you what I'm talking about. We can see here on the RSI on the daily time frame, we've got divergent highs, we've got lower highs, okay, where we had higher highs in price, we've got lower highs in RSI, and we've come back down with a spike into the neutral zone here. We've seen the same bearish divergence building up, bearish divergence in RSI, bearish divergence in MACD here, right? And on the OBV we haven't seen that, but we don't always get divergence in the OBV, but we have here in the strength of the MACD. Now this can disappear, another swing high, we can undo this, but for the moment this is divergence between the prior highs and current price, and it is present, so there is weakness here. So we might not roll over right away, but I think we're going to sometime soon. So that's what I mean by saying that the short size setup is going to offer the best short-term trade. It's a little too late with this dying momentum to be getting long here, and I wouldn't want to be getting long here. After a 5-wave move higher, some bearish divergence building up, I'm going to be looking for a short entry. I would not tell people what to do, but that's what I would recommend you should be looking for over the short time frame. You should of course look for a swing low and swing high below the prior high, so that you can secure a safety, a margin of safety to put your stop loss, and then you can be short from there. But however you trade is up to you. Either way, we've seen 1 into 2 at intermediate degree, and now 1 into 2 at minor degree. Now there is another way of looking at it, which is if we switch off our primary and we bring up the lower wave degree interpretation, it's the exact same except 1 wave degree lower. So minor degree into minute instead of intermediate into minor. Now why am I considering that? As it's been pointed out to me on the Discord with our members, if we look at a prior intermediate degree correction, we can come back to the wave 2, which made the COVID low from June 2019 to March 2020. Now we can see this was a substantial move. If I'm labelling that intermediate degree, that's 260 days. Now let's have a look at what we've got here on our hands that I'm suggesting was also intermediate degree. So now let's take the measurement here. Right, this is 149 days. It's significantly shorter, so it is believable that it's a wave degree less. That is minor degree. Now that does have an impact in what happens in the future. It still means we move higher. It still means in many ways it's more bullish, but it means that a larger scale pullback will occur in months to come, and it will be big and it will be scary. So what that means is, let's say that was intermediate 1. into intermediate 2. Intermediate 3 will take us to new all-time highs. I'd bet money on that and be very happy to say that's the case. However, if this is minor degree 1 into 2, we won't necessarily get minor 3 to new highs. We may get 4 and 5 to new highs, but what that will actually be is intermediate 1. And then you get a big and nasty correction. Right? Because we've now gone 1 into 2, something like that June to March 19 to 20 swing for intermediate 2 within the primary degree 1. This is primary wave 3. Pullbacks in the primary 3 of the cycle 3 and the intermediate 3 and the minor 3 within that are probably going to be briefer, because now we're in that larger wave 3, we're going to push up higher. So it's 50-50. I'm not decided on it yet, to be honest. Either way, look at it positively. If we come up in 5 waves at minor degree into an intermediate 1, we get a big gas pullback, perfect opportunity to buy more. Okay? If we're done with intermediate degree, then intermediate degree 2, then intermediate degree 3 and 4 will easily take us beyond the prior high by a long way. Right, then it's 4, then it's 5, and then we're done at primary 3. Okay, and then we're going sideways for a long time in cycle 4. Okay, and then we've got cycle 5 into super cycle 3 and a long sideways movement in super cycle 4. So what we're talking about is breaching the all-time highs and then pushing onto some extreme new highs and then spending a long time going sideways. That's likely what's going to happen. Now, that fits the narrative in my book. Institutional money, ETFs, sideways moving markets. Still big swings relative to any other market, but just not the gigantic 90% collapses we're used to in crypto. You know, more sideways consolidations rather than total collapses. Either way, I digress, I'm getting distracted. So 1 into 2 at minor degree, 1 into 2 at minute degree. Could be coming in anytime now. Might want to push for this median line one last try before we roll over. Okay, so now let's turn that off and let's have a look at the bearish count. So bearish count coming into our W here at the bottom in November 22, we're getting an ABC. Right, and we're going A, B, C into our target zone 1-to-1 extension of the A of the C equaling the A into the 50% to 61.8% golden zone retracement. It's all up here. Time frame's very off in terms of this distance to here is less than and nowhere near equal length. Equal length is over here at this white vertical line here. So that looks a little off if that's the same wave degree, but it could be since it's still within the corrective channel. Now on that note, let's switch off the log and just have a look at this corrective channel for the moment. So if we take this, and all I've done is gone from the top of the A, from the start to the A to find the bottom of the B to find where the C is going to be. Right, we're back up at the top of that channel now. We've bumped into it once already, we've bumped into it again. So if the bears are right, this could be the top. The top. If that's the case, everything will melt down. And I would expect to see extremely violent sell-off, which will slice through the bottom of the B wave in short order. Okay, and we will be just on our way down to Chinatown. Okay, bullish count, we come up, we come back, 2, we move higher. Bearish count, we will rip all of this to shreds. Okay, because if we've got to make another intermediate degree zigzag down to new lows, it's not going to fuck about. Okay, it's going to be a total rip your guts out crash. So if we see anything other than that, we see more consolidatory kind of behavior and then another swing high. Every time we do that, we're breaking the bearish case a little bit more, we're weakening it a little bit more. But we have to be aware that we are in potential danger zone. So in the short term, as I said, when we get that peak and we get a first low, swing high to a lower high, that's a perfect shorting opportunity. And if you're right and the bears are right and you're a bull and you've done this to cover your ass, you're going to make money on the way down. If you're a bear and you set it up properly, you're going to make money on the way down. So bullish, bearish, right, wrong, it's the most sensible thing to do if you want to trade it. Okay, that's just my opinion, and it's not trading advice. Do not hold me to account for that. Right then, so let's just remove that polygon. We don't need that. So now let's have a look at the base channel in linear. So in linear. So this supports the idea that we're bullish, in my opinion. We've breached the base channel here and kind of back tested it, and we've had this little bounce. Now if we were to continue to rally into that fifth wave, depending on how much space we buy ourselves into this 1, 2, 3, 4, could get an extended fifth, depending on how much space we buy, a move back to that channel would be perfectly normal, and that could be quite a shallow 1 into 2 for minute degree. We've got a lot of work to do yet, but the fact that we breached it suggests that we are moving further into that wave 3. So all I've done is taken the lows, right? We're not a corrective channel, so we're not taking the swing A into the B with the placement of the channel to get the C. That's what we've got with our corrective channel. That's what we're touching now. We're taking a base channel, which is the first lows projected from the first high. This should give us our 1 into our 2 into our 3, which is going to breach it. Right, that's what we're thinking is happening now. It's very early days though, so we can't get carried away. Right then, so that is the short term. And the long term, I don't think there's anything else I really need to cover. So we'll just do a quick summing up. We've spotted divergence on the daily time frame with between the most recent highs on the RSI. We spotted a slowdown in momentum. We had that breach of the pattern in the OBV. We bounced along the top of it. There's signs that we're slowing down. Volume has declined into these highs as well. So we should be suspicious and prepared to see a sell-off in the shorter term. From a bearish point of view, one would expect nothing more than a total collapse over the coming weeks. Right. If we come into this target zone, if this was indeed an ABC and this is indeed a completed corrected channel, then we would expect to see over the next weeks and months a total collapse to new lows. So we're at that little inflection moment where we just need to be on guard. This could push higher in both bullish, and it could push higher in bearish cases as well, which is starting to show some weakness. So just be on your toes, pay attention, and don't do anything silly. Alright then, thank you very much for joining us, guys. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases, and feel free to sign up to the Patreon. There's a link in the description box below, and feel free to leave us a comment in the comment section as well. I'll be back with you guys as soon as I can be. Very busy lately, and I'll be getting a weekly live stream sorted out for either Friday or Saturday for my patrons. I will let you guys know on the Discord. Take care of yourselves. I'll be back with you as soon as I can. All the best. Bye bye.